10 points higher for the Nifty, in fact flat actually, off 100 points almost from the day's high. You've got Bank Nifty which has fallen now, and hotel, some chemical names, few names from the IT basket, that's about it. The market from the day's high I think has taken a turn for the worse. The Bank Nifty has actually fallen, led by HDFC Bank. Dipan Mehta, they say time heals everything, and in markets that's what patience is rewarded. But when it comes to HDFC Bank, it's patience and time both, and shareholders are not getting rewarded.
Yeah, good afternoon, Nikunj, and thank you for having me on your show. Well, you said it right. We need to have more patience when it comes to HDFC Bank. And I don't know, at some point of time, this particular underperformance will reverse for sure. I mean, if you expect the bull markets to sustain and you expect that banks will be the driving force, then how can the largest bank by market capitalization be left out so far behind? Just think of the way Reliance Industries moved, right from 2018 to 2020 or 21 also. It had a fabulous outperformance. And that's what large cap stocks do. They have that period of 5 to 6 months where they really rally and they almost go by 40-50%. And I think that, that's something like that would play out in HDFC Bank as well. It's like a spring, which is being continuously wound, and at some point of time, it'll shoot up like a rocket. There have been some integration issues, and last quarter was still only HDFC Bank numbers. But as the quarters go by and we get a complete consolidated picture post-merger with HDFC, I think some of the uncertainties around the merger would be over and done with. And then people may realize that this stock is trading at attractive valuations. And therefore, you could have a P price to earnings re-rating taking place in HDFC Bank. So I remain firmly convinced of the HDFC Bank story. And management guidance to double balance sheet in 4 years' time means that they're looking at 18% type of credit growth, and that's fantastic at their scale.
I don't think the debate is that, whether this is a compounding story or not. For decades now, we've seen HDFC Bank has rewarded shareholders who've managed the patience game. But in the very near term, do you think there is any scope of a revival? What are the charts reading?
So the view has been the same on HDFC Bank, going nowhere. We need to wait for price action to confirm. 1530, 1550 is a support, 1700, 1750 is a resistance. And the price action has been terrible. Even before the merger got announced, it was stuck in this band. So for now, it's very difficult to take a call at 1580, 1600, whether it will go to 1700 or break 1530. For now, given that the whole banking space has done well, would assume that it doesn't break 1530, 1550. But momentum reversal is yet not seen. So for now, it's sideways only.
Okay, you got HDFC Bank, which has actually taken the blow, so to speak. Now, a lot of mid-cap stocks, you've got packaging companies which are doing very well. You've got Shakti Pumps, Sri Venkatesh Refineries. So the mid and the small cap indices have actually hit a new high. And this is happening irrespective of what is happening in benchmark indices. Also, power is one theme where the price action, I think some would say, has really moved from genuine good power utilities to companies which exist with very little scope of profitability. I'm not getting into specific of names here, but look at the assortment of power stocks here. Top gainers in the power space, a lot of them are actually sub 20 rupee stocks or sub 50 rupee stocks. I mean, NHPC is a government-based company, but let's say if you look at JP Power, you can throw in a Reliance Power, you can throw in a Ratan Power. A lot of these stocks are just, moving on current of 440. So Dipan Mehta, outside every power transmitter or a junction box, there is a sign which says that if the power voltage is high, it could hurt you. The danger sign, remember? The skeleton and two bones.
The skull with the bones.
Yes. Yeah. Is that where the power sector has moved now?
Oh, no, that's a bit of an exaggeration, Nikunj.
No, for small cap stocks, for small cap power stocks which have no relevance, no capacity, nothing, and they are up 10%.
Nikunj, you're in a bull market, no denying that, and there's going to be heightened speculative activity, which is what we are seeing. And concentrated buying in a few of these small cap companies can have this exaggerated stock price movement as well. Sometimes the performance follows the stock price movement. these are great times in terms of the capex cycle, and a lot of the power equipment companies should be looking at very good numbers. Raw material costs also are pretty much stable, and base effect to come into place as well. So I'm not that perturbed about maybe there's too much of frenzy in a particular segment. It does settle down as well. But by and large, I think with mid-cap indices reaching at new levels, it's a great time for patient investors who have been around for a long time. They are seeing fabulous gains in their portfolio. And I know that the real issue here at hand, everybody is asking is where is the correction? Where is the correction? Everywhere I go, people ask me that question as well. And the answer is that we don't know when it will be. But the fact that people are still talking, where is the correction, means that they are to an extent underinvested. And maybe the correction is some way away.
Talking about the packaging stocks, let me take it across to Sharad and find out exactly why is it that they're all rallying. Sharad?
Well, yes, in focus we are having the packaging stocks, and what we are gathering from our industry sources and channel checks is there is a realignment happening of the entire supply chain. Now, do remember that the supply mismatch is expected to come down, especially for the domestic market. Now, earlier what the domestic manufacturers were doing is that earlier they had actually curtailed their overall output because of the lower contribution margins happening. So a kind of an improve or an impetus boost is expected, at least on the supply side. Now, of course, the trigger is important because the demand side is also being met, and this is coming, especially demand and inquiries coming from the pharma and the FMCG segment, and that is expected to pick up from the mid-September, as well as also the festive season is also picking up. Apart from this, the Q3 operational margins, they are expected to go up as well, and also there is a lag effect when it comes to the packaging companies, and the benefits of fall in crude prices are actually trickling in as well. Looking at, of course, the stocks itself, we have Nahar Polyfilm, Polyplex, Jindal Poly, as well as Uflex, where most of the majority of the stocks in the packaging space have actually fallen between 25 to 46% on a one-year horizon, and the valuations also, most of them barring Polyplex, having almost a 33 times EV EBITDA multiple. Most of the stocks in this space are having or trading below the valuations of 10 times of the EV EBITDA multiples.
All right, the Bank Nifty day trader. Now this is the underperforming index for a sector where the expectations have been the highest. But markets, they go through phases of time-wise correction, price-wise correction. Even though the big picture in terms of where banking, where economy, where NP, and where the cycle is headed, I think those factors are intact. But the reversal, I think, is very sharp. Naresh, is it back to square one just when it appears that the market bulls were on a front foot, an odd day pushes you on the back foot?
So the view remains same as I said in the morning. Buy on dips. This is a good entry point at 19,300 to 350 levels. Would keep a stop loss at 19,250. And the volatility would continue even tomorrow. There is a huge MSCI buying selling rejig which should happen tomorrow at 3 to 330. Could be a large one. So there will be volatility today as well as tomorrow. And from Friday, it could be a better way to look at it. If you look at what is happening in the broader market index, that is much more clear. We are almost up 1% on the mid-cap index, as well as the small-cap index, as well as everything beyond the heavyweights. So the viewers, post this reject-based volumes goes off, there could be a bounce back towards 19,600. So that's my view. Would keep a stop loss at 19,250 and go long at current levels.
This falling market, there are lots of bright spots. We've been highlighting as to how the packaging names are looking good. The hotel stocks have really been on a tear. And then, of course, there are individual cases like a Zomato. And I'm not talking about the block deal here, but no surprises that HSBC has already upped their price target, considering Zomato already hit that triple-digit mark today. So from the earlier 102 price target, they've upped it to 120 now. They're saying that they have a conviction on the long-term value of Blinkit. They're valuing it at $5 billion, which they say is a bigger value unlocking than their food aggregator, core business. They're saying that Blinkit itself can see 6 to 7% of a move and 3 to 4% EBITDA margin uptick as well. They're saying hyperlocal can be a much bigger business in the long term. Dipan, we are already at 100 on Zomato. I mean, the market has clearly, moved it almost 60% year to date from those 40 lows. Would you still recommend buying into Zomato, if at all you like the story?
No, certainly we like the story, and clearly the management is following through on its plan. The food aggregator business has certainly turned EBITDA positive, and that is quite impressive. And going forward, I think that particular division will get solid into profit. It's just that I still remain a bit uncertain about the quick commerce business, the Blinkit division, which they have acquired. Maybe the break even over there is a few quarters, maybe a few years away or so. And that's a business, of course, which is much larger than the food aggregation business, but it is something which will have a higher gestation period as well. So from that point of view, I just have to be a bit cautious at these levels. Stock has gone up significantly, and maybe at a correction, it may make more sense to enter into Zomato. And I think that's true for many mid-cap stocks as well at this point of time, that a lot of these stocks are up 30, 40%, even doubled in the last few months or so. So from a margin of safety perspective, from a risk return profile perspective, it's better to just wait and watch and stay away from making at least fresh purchases at these levels, because maybe you could be caught on the wrong foot. So I would just like to, have a note of caution over here that no doubt medium-term, long-term trends of the stock market look fantastic, but maybe the market has got slightly overheated at some point of time, especially in the mid-cap space.
₹100 for Zomato. So Dipan, are you still holding on to the other ones? I think we've discussed Paytm and you've called it a hyper growth company. But at what, closer to ₹1,000 is now Paytm also a stock where you should wait for a decline or take some profits off the table?
See, I think if you have a trading mentality, then certainly these are good levels to take some profit off the table. But from a longer term investment, it's just that don't make any fresh purchases in any stock. That's the kind of mantra that I'm just thinking about at this point of time, that even if I have cash in my portfolio, I don't want to buy at these levels. I just want to wait for a more serious correction, where at least you get stocks maybe 15-20% lower or so, and that would provide you with some margin of safety. Because the worst thing which happens over here is that you buy at these levels and you have to see 10-15% correction in the stock counter that you have bought, and that certainly does tend to get disappointing. In any case, investors that I know of are more or less fully invested. We ourselves are. So even if you don't buy at these levels and you miss on maybe another 5-10% upside, I'm perfectly fine with it. So it's just that we just want to try and get the entry level for any fresh investments in the market. Just want to wait and watch and try and get the entry level right when there is a correction. And mind you, the correction, whenever it comes in the Nifty or the Sensex, will be more exaggerated in the mid-cap counters, because they have gone up on account of concentrated buying. They will come down also when there are sparing up of positions by the traders over there. So these mid-cap counters, which you see jumping up by 10-15% every day, do keep in mind that they can correct also by 10-15% on a single day.
Let's quickly take it across to Sharad and get in what the dealing room buzz as well is, considering the markets have completely given up their gains and banks are the ones which are caving in. Sharad, any individual stocks which are propping up though?
Well, yes, in focus we are having our as financiers, and what we are hearing from the dealers is that there is a buying scene in certain counters for the domestic institutions. Now, even the volumes itself, if you look at it, they are coming in at almost 11 times its 20-day average, and the key DI investors already invested in the company include the names such as Kotak Mutual Fund as well as Invesco Mutual Fund. Now, we did look at the valuations also, and currently the stock is trading at almost 3.1 times its 12-month forward price to book ratio, and if we compare it with a 5-year average, that is still on the higher side of almost 4.2 times. Now, going ahead, management has given a guidance and they have maintained it for the AUM growth of 20 to 25% while the street has been actually skeptical when it comes to Q1 numbers because of attritions being seen. But if the ROE numbers are maintained between 14 to 15% and NI growth is there, then the street can expect some earning upgrades coming in for the stock.
Just a flat day of trade. Frankly, just what is important here is that you got real strong sustainable gains in the entire hospitality space stroke the hotel space. Dipan, we keep on discussing this perhaps on a daily basis, that what is the best way to really participate from a stock market standpoint, given that soon Cricket World Cup will start, and that is going to be a bonanza in itself, whether it's travel, whether it's food delivery, whether it is eating out, whether it is liquor consumption. This really could be a theme within a theme for next couple of months now.
Yeah, that also, and look at the kind of festive season planning which is taking place. I think if you speak to retailers, be it in electronics or consumer goods, or even some of the other consumer-oriented businesses, they are revving up to having a fabulous festive season as well. Maybe some amount of dampener because of subpar monsoon, but by and large, I think we are going to see hectic spending taking place over the next few months, right up to December. And consumer facing companies, be it retail companies, could be specialty retail companies, the likes of Metro Brands or Manyavar or Campus Activewear, which have underperformed. Then you have Titan, Trent, they could do well. I think companies like Jubilant Foodworks, Devyani International, which last quarter disappointed because of various reasons, they may start to do better. And companies like Indian Hotel and Interglobe Aviation may build on the kind of gains which they have got and the kind of base which has got created. So you're going to find a lot of interesting ideas on the consumer-facing stocks. And these companies, of course, as we speak, are on the expensive side. But if the earnings surprise us, I'm talking about the December quarter earnings, if they surprise us, then you could see a further up move in these stocks. But at present, I think they are more or less well priced, and partly some of the growth has got priced in.
Banks are falling, little bit of shakeout. Hotel stocks are not falling. Pharma is holding very, very strong. I want to look at Aurobindo Pharma. Why am I looking at this odd one out? Because it's, in a sense, really represents the strength of the comeback in pharmaceutical. A bombed out stock, nobody liked it, nobody believed it. Sub 400 has become 800 plus. Kunal, is the best of the gains in Aurobindo Pharma, is that behind us? Because this, in a sense, has been the flag bearer of comeback in pharma.
Yeah, in fact, I would believe best for the gains for most of the pharma stocks is actually behind us, because over the last 2-3 weeks, I remember I think 2 or 3 weeks back, most of the pharma stocks were going into a different level of a breakout. Sun Pharma closer to 1200, Glenmark was around this 800, 820 odd mark, Zydus Life, Cipla, etc. These stocks were going all guns blazing. But now, what has happened is that these stocks have gone through a major topping out in terms of most of the indicators. What I would probably expect is that pharma stocks would come back into that neutrality phase. And when pharma stocks, for example, traditionally these are considered as low beta because you have beta of 0.5, 0.7. Now all of a sudden when you see the beta shifting to 1.5 for these stocks, there has to be a point where the beta comes back into neutrality, and that takes a process of at least 6 months or so. So I would probably be not too much bullish on a medium term. That's by a 6-month perspective for most of the pharma stocks. You may have the 5%, 7% rally every now and then after a phase of correction, but as a materialistic up move for the pharma stocks from the previous month highs, I don't expect too much of a gain on the upside.
Right, okay, that's the take coming in on pharma. Let me quickly take the BTST trades as well going before we wind up for the day. Naresh, on your list?
So that would be a buy on Indian Hotels, new 52-week higher, stop loss at 411 and a target price of 425. Second, a buy on Axis Bank, again another stock which hit a new all-time high today. Stop loss at 987, target price of 1020.
What's on your list?
So Chola Finance is one of the stocks which looks attractive. It's confirmed a breakout of the 50-day moving average after remaining below it for the last 1.5 odd months. So would suggest a buy 1160 as a target, stop loss at 1098. And Hindustan Copper is something which I've been advising earlier with a target of 165. So maintain those targets on the stock and stop loss at 152.
Right. It's the OMCs which have cracked really hard today. But Dipan, great to have you on the show. We'll let you go on that note.